Good morning, everyone. I'm your host, Anne-Marie Band. Welcome to the Daily Edge on the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group's event contracts to trade indices, energy, metals, and now Bitcoin. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group's event contracts. And you can trade them on the custom app or using the DOM on the main platform. What I like to do is start by sharing the Place Your Trade site. We are on the dashboard. I've got the amazing and energetic Kunal Desai with us today. And I want to show you a couple of the very cool tools that you can find. One, something that covers the top stories overnight. Two, the probabilities that how we open the day that we might close. And today's are a little bit on the choppy side. So we'll be adjusting ourselves from there. So without further ado, I want to introduce Kunal Desai of Bulls on Wall Street. Kunal, we have known each other since around about 2008.
Yes.
So welcome, sir. You've had an amazing journey. I'd love to have folks learn about how you got your start and a little bit about the amazing opportunities traders get to have with you to really come in and watch your trading day and trade along with you. Welcome.
Hey. Thanks for having me out. Looking good. That intro music, by the way, not bad. It's like a little motivational guru Grant Cardone / hip hop style. It's very, very millennial of you.
We like it. So how did you start in trading? What brought you to the trading space?
So my dad actually brought me into the trading space as he was always interested, like in the 90s. You know, when like those internet cafes and stuff started popping up. Like my dad was like one of those guys, like, you know, open the E-Trade account or the Scott Trade account, is sitting there with his friends, right? Oh, check out the Yahoo, check out the Amazon. And, you know, everybody's like kind of making money out of nowhere, and because everything was just flying in the late 90s.
Right.
My dad was like always just like on the phones with his buddies, like, ooh, check this out. And they don't know anything about trading anyways, but like, everything is just going up. So everybody's like a huge genius at the time. And I had like so many of my dad's friends and neighbors, like that really weren't the smartest guys. And I'm like, oh, look at all the money they're making. And so I was always super interested in it. My dad would like give me some tips and stuff and like, check this out. So when I got to college, I had all this free time because, you know, in high school, you're so structured. It's like basketball,
right,
school, Spanish club, chess club, whatever. And in college, I'm like sitting around like all day, like in the computer lab. So I started like really, you know, I opened up my first trading account and my dad gave me some money and then I cobbled up some money and, you know, I started trading and I just loved it. Like I wasn't any good at it. And I did it all throughout college and hoping to be a full-time trader like when I had left, which obviously I was not able to do. So, but I really kept at it for a long period of time, you know, post-college. I had to go get a real job because I still wasn't a trader yet. But mostly, you know, I didn't have any experience as a kid. I didn't have no capital, like, you know, all these things that you need that you don't think you need. And so I ended up working. And then probably for like a few years, I was working and then just trading while I was at work. And then in 2008, I went full time right when the big recession happened. And that was awesome because it really, like those kind of moments, like we're in one of these kind of moments now, these like kind of big inflection points where you get a lot of range and you have steep trends. It really, you know, I hit the ball running then because we're in this huge market crash and it's like we have all this volatility. And, you know, from then on, I opened up my business and I've been cooking it ever since.
Cooking it. That's a good one. I like the cooking it. So when was the point where you said, hey, I got it? What gave you the space where you had the rhythm and flow in the trading space?
I would say that actually my first 2 years, 2008, 2009, were really successful, but a lot of that, the range of the market just paid me, because like 2008 was just a crash year. Like you kind of know, like if market opens up green, it's rolling red, and so on and so forth. So those were like really simplistic strategies in terms of momentum. And then 2008 was the exact opposite. Like anything that was dipping or cheap, right, is ripping, just like it is kind of right now on a smaller scale. So those were, like, I would say, fairly simple strategies of momentum. Like those are what I call like line drawer years. Like what I mean by line drawer years is like right now, you'll start to see it now as we get into the bull market. Like all these people just draw some squiggly lines on charts. They'll rip, and right, everybody will be like, they'll get famous, right? They'll be like, wow, this guy's such a technician, right? What a technician. He drew a horizontal line on a chart and it's ripping, right? And then you'll see the tweet, right? Posted this 8 days ago, it's up 30%. And it's like, well, everything is, nice squiggly line on your chart, buddy. But, so those were line drawer years where, if you're trading with the trend, you're going to make money. Come 2010 and 2011, we had some debt ceiling stuff. Those years got way more tricky as you're coming out of the ease of like 2009, everything's just cheap, so it's going up. But as 2011 started to roll around, like you started to get the slowdown, and the market structure starts to change. And so that was when I really hit my stride, where I was like, you know what? I really know what I'm doing, like up, down. If you can trade rangy markets, distribution markets, accumulation markets, then you really know that you're able to last a long time, because markets trend for, it's only really a handful of months every year, like a steep trend. But the rest of the time, you're playing defense, you're using different strategies. You might be using mean reversion strategies, things that are completely opposite to momentum trading. And that's where you got to have a really big toolbox to succeed. A lot of times, and we saw this in 2021, 2022, there were people, I have friends that made millions of dollars trading small cap stocks, momentum stocks in 2020, COVID years, beginning of 2021 with the EV boom. And then when that market structure changed and you only knew that one momentum strategy, well, guess what? They lost all their money, or most of their money. And all of like 2022, we really were in a range after spring. And so it was a much tougher market. Like you really had to be precise with your entry points to the T. Like you really had to know which stocks to pick, and you had to know how to trade chop and things of that nature. And you can still make good money during those times, but it's completely different than your line drawer years. And that's a big part of the trading thing. If you start at the right time or you catch wind at the same time, it may make you a little bit complacent, like you know what you're doing, but the next year the market will change. Like whatever's a dog one year is amazing the next year. Whatever's amazing next year often is the dog the next year. Even in terms of trading setups, it's not just stocks, but trading setups will change year to year too. Most of the setups I've been using, they've been applicable since I started trading, but the utilization of those setups and when they actually work is a big part of it.
Right. So coming right there, if we think about this current market that we're sitting in right now, how would you assess it? What would your assessment be in terms of the skill events in the toolbox required for trading this kind of market?
So right now, this is just a pure price action trending market. There's that. You can't overthink this one too much. So like if you start looking like today, like you could have looked and been like, oh, the CPI did this or that, or the interest rates are going to do this or that. Interest rates, CPI, jobs reports, these are big events in bear markets. They are not big events in bull markets. So if you're in like 2019, 2020, the jobs number comes out, there's not really any reaction in the markets. Right? Unemployment comes out. There's no reaction in the market. Your CPI comes out. There's very little reaction in the market. In bear markets, those things are huge events as they're often moving the market. In this particular case, they were the cause of the movement of the markets. But now that we're in this big trending phase, you will start to see, right, what the climb of the wall of worry. These numbers don't really mean as much. So in this particular market, you can't outthink it. This is a line drawers market, draw your squiggly lines, and you can make some money. But beyond that, there's some really powerful things going in terms of you have so many stocks that were down 70, 80, even 90% off their highs that have spent a year basing. Stocks get their power from consolidation and basing, and your classic just technical analysis thing of like different market cycles is run up phase, a rundown phase, which is your bear market, a big long accumulation phase, and then coming out of it, which starts the next trend. And that's what we're seeing in so many names. And so right now, like all those names that are sitting on big bases that have like just a spark of news, they don't even have to really beat their earnings, right? It's just like they announce their earnings and people are like, not bad. We kind of knew. And they're starting to fly. So you're even seeing these dogs like Palantir, like PLTR, and UPST, like stocks that are down 75% plus. That little piece of news can spark them. And that's what starts these big trends. And we're starting to see a lot of those opportunities over the last couple months. And people are picking off the stocks one by one off those bottoms. And that's like your telltale sign of bull market. When you see large cap names up 100% on the year, like Meta and NVIDIA, and then you start to see the bottoming names start to really pick up steam, and so many of them are going doubles and triples off the lows, then you're in a bull market. And you can't overthink that and start really worrying about interest rates, CPI, so on and so forth. Based on the current trends, if you're just using any trending cycle or trending look, all right, if you're using, say, moving averages to identify trends, well, all your indexes are above all their major moving averages anyways. If you're using higher highs, higher lows, right, these things are all happening. And then just the eye test, right? Like you feel it. The momentum is there. You can feel it. And, you never want to gloss over that fact that the price action is telling us that the market don't give a crap anymore about some of these things.
That's amazing amount of knowledge dropping you just gave us in the last 5 minutes that you've been talking, really tremendously. And I think for the folks that are really struggling through the markets, you nailed it on the head for what is happening. They are overthinking it and trying to predict a collapse instead of using that momentum to follow through spaces. Now, at some juncture, things are going to slow down. What sorts of things do you look at in your eye test that says, we need to pump the brakes here. Let's take a step back and see if we're seeing a market change? What does that look like?
So a couple things that I'll start looking at. Number one is the amount of breakouts versus breakdowns. So people, you will use different measures of market breadth, like advanced versus declines and tick and stuff like that. For my style of trading, like that does not really work because I'm looking for explosive moves, right? I trade momentum stocks. So I track like number of stocks making 4% breakouts versus 4% breakdowns, looking for significant moves. When those amount of breakouts start to really, really get smaller and smaller, they'll tell you that the market is narrowing, right? And that you're not going to see as much speculation from like maybe non-big tech names or wherever the money is flowing. But beyond that, if you start to see failed breakouts, right? You start to see patterns like flag patterns or flat top breakouts, right? These like kind of consolidation patterns that are near highs on stocks that are up a lot. When you start to see those fail, that's when you know like people are not willing to pay up for the price, right? And so when you start to see those things fail, then you start to know like, okay, the market structure is really, really changing. We might be getting into a phase of distribution for a period of time where you have to digest all these gains and really churn out all the dip buyers and breakout buyers and kind of let some fresh things come in. And so those will be things that I will be watching. Like, right now there's all these stocks that are like really good daily charts here, like this or AI just broke out today. When you start to see those kind of names, like really start to like, they push into the resistance and then they bust down, then it's telling you, okay, the market structure is changing. People don't want to pay up for that anymore. Where in a hot market, like paying up doesn't mean anything, right? Buy high, sell higher, and forget about it. But those only last a few months of the year anyways. And we're just in that deep cycle right now.
Excellent. So how do you manage risk in that space? Let's say you look at something and you go, all right, it's broken out over this edge. It's time to either accumulate or raise the stop. What sorts of things do you help your traders with raising stops or keeping stops at levels that are important?
Sure. So the first thing to do is really identify like what type of trade it is. Is this a swing trade, a day trade, a position trade, maybe something you're building into for longer periods of time? I think probably the time for position trading is over. A lot of these stocks are already up a lot. So I'd be asking myself, is it a day trade or swing trade? Am I holding for 3-5 day momentum bursts? Or am I, right, is this something I'm scalping for income today, right? So if I'm scalping for income, for example, if it's a day trade, I want to align the daily chart with, I use 5-minute charts. Yeah. So the daily chart gives me the big picture idea. It's my thesis. Like this is a name that's about to explode and it could go for 4 or 5, 10 days or wherever, your measured move might be. All right. So I have this idea. Now I want to look at my intraday chart to align with what my thesis is. So in terms of trading, there's 3 stages of the day in intraday trading. You have your open, your middle, and your close. The opening patterns that you use would be very different than midday patterns or end of day patterns, where your open is so short. So if it's an opening pattern, then I have 3 separate looks that I'm essentially looking for that align once you're over the level on the daily chart. And so now you're playing with the ebbs and flows. So you are managing your intraday trades based on the specific pattern that you're using, right? So say you were doing an opening range breakout. So that'd be a stock that, right, pops up at the open and it builds out a range for, say, 30 minutes to 60 minutes and takes that level out. Then you're going to be using, right, the bottom of that essential range to manage your risk. If you were taking a midday pattern, like say you were having a stock that had a tremendous run, and like, for example, like I'm in this U right now. So this U had a breakout, 38, I believe, was the breakout area on the daily chart. So it ripped over 38, got into the 39.25-ish area on the morning pop at 10 a.m. And then what you start to see is like, so now the open is over. So you need deeper pullbacks. So like now, like this stock starts to marinate at 38, 38.20 for 10, 15, 20 minutes. And so now you have like a specific VWAP bounce setup that you would play back to the high of days. And so I have like a 38.20 or so entry on this thing, but that's a VWAP bounce pattern. So your stop is going under the VWAP. So you're going to change where you place your stops. You can't use like random stops or arbitrary stops, like 2%, 5%, so on and so forth. It has to be pattern and time frame specific. If I was doing a swing trade, for example, then I'm using a whole different subset of ways to manage the risk. When I'm doing a swing trade, I'm aligning in a lot of different time frames. So I may look at the daily chart as my idea generation spot, but then I'm going to be looking at, say, hourly charts to really hone in on where the levels are that I want to put my stop loss, because you may not find something very clear on, say, the daily chart. And if you're looking too zoomed in, like if you were using a 5-minute chart to time your swing trades, you'd be in and out of your trade so fast, like you wouldn't know what hits you. So you want to kind of change the time frame a little bit. So I'll use daily charts, hourly chart, and sometimes even a 30-minute chart to really start to identify the key inflection points. And then I'll be using my stop losses under those. You don't want to be too tight on those, especially in this market. A big thing to understand is a stock's ATR. That's its average true range. Like how much can this stock actually move? So for example, if a stock has a $7 or $8 ATR every day, and you use, say, a $1 stop loss, most likely, right, you're going to get stopped out of that trade. So you want to also be really aware of the range of a stock, because if you get too tight inside that range, I mean, you're going to get stopped out probably no matter what.
Yeah, that is so great. This is the perfect time for me to flip to the charts and talk about exactly what you were referencing a moment ago. And here we are looking at Trade of 8. And we are going to start looking at the daily chart, just like Kunal said a moment ago. And we can see that from the break of the day before, we're now in this range that is continuing to move up. This is called a bid ask for those of us that aren't used to this sort of look at a chart. And it tells us where the buyers and sellers really argue about price. And so the interesting thing is when the colors get really, really sharp, and then you see a break in one direction, you know they're going to push price up to the edge of that, and vice versa. If you see a break underneath, they're going to push price down into the next space. So this is what Kunal was talking about in terms of looking at a chart and seeing its opening range and having it come in, because it did fade a bit and then break back out. And then we can look at the 30-minute. And so in this space, we're now slipping into the midday kind of range that he spoke about, which is absolutely fantastic. You can see I actually use a Hull moving average because it sort of squishes things into the right space. But you can see that what they're doing is forming consolidation in this area that's going to help us move either back into the range or further out to the upside. So one of my favorite things to do when we're using these event contracts is the following. When the chart opens up and you see really skinny motion like this is stop running, right? Because there's literally nobody waiting the pile in. It's just stop after stop after stop. It's all the folks that went long on this break and then started losing traction. It held the low and started moving up. So I know this is the framework for my base pattern. And so if I go over here to my event contracts, and we've got the yeses on this side, we can see we're up here at 44.22, and we've got this real breakout pattern around 4,400. So we can see that right now, this is up at $18. Now, the most you can make is 20, and that still is about 17%. But if you're thinking to yourself, hey, maybe it'll hold the heavy congestion zone, you can get the 410s, the 4410s or the 4420s. And this is the price that you can get in at. It works really nicely. You can double your money if you hold on to the edge, but that is the event contract. You can see it move very easily as price action either breaks out or comes back in. What I'll be looking at is if the price can pull back and retest those areas, just like what Kunal was talking about in terms of this midday kind of choppy action. You might need to have yourself a little bit of a deeper dip to wait for the price action to continue. You can get yourself maybe those 4410s at the $10 mark, or the 4420s at maybe the $6 or $7 mark to hold it. My thought is, hey, they're chopping around here. If they lose that edge, it's going to come in and hold that balance. But this is this meaningful sideways chatter that begins. We got so much incredible information from you, Kunal. Honestly, it's been amazing. And I'm sure that means that a lot of folks, I know a lot of folks listening are saying to themselves, oh my gosh, this guy's got so much. How can I learn from him? And tell us about how you take traders up, how they can reach you, and the types of things they can learn if they want to study and trade with you, which is really what you're doing right now in your space.
Yep. So I own Bulls on Wall Street. You can find me on Twitter, Kunal, Kunal00. I own Bulls on Wall Street. I do 60-day trading boot camps. They're intense. They're 4 days a week. I'm teaching at night. Then the traders are watching me trade during the day. So this is like an all-encompassing thing. It's not, I'm not into the on-demand stuff or the video stuff. Like, that's not my style. Like, I like to dig in deep. So what we do is an immersive system. I'm trading live during the day, prepping everybody, explaining while I trade. And then at night, I'm teaching class Sundays, Mondays, Tuesdays, Wednesdays. And then we do a study session on Thursdays. And we really dig in deep into granular concepts, meaning I start everybody off at the dead beginning of what the heck the market is, the market structure. And day by day, we start to layer on more and more complex concepts that start to mold together. But it's a university style system, homework, quizzes, the works, and all taught by myself.
Awesome. Awesome. So when you work with traders like this, what are some of the big hurdles that you see them have to go through when they're getting in and you're being so immersive with them? What kinds of pushback do you see the traders say, well, you know, whatever? That's sort of a stumbling block for them as they make their way to excellence where you are.
I think a lot of times people are often successful in other parts of their lives. So when they get into trading, they have very, very high expectations of themselves, but not in relation to the amount of work that they got to put in. That's why, you know, my class is so long, because we really got to drill down these things like over and over. Sometimes when you've had success in other parts of your life, it's like, hey, I can watch some videos. I'm going to mess around for a few days. I'm going to put some money to work. And like, I should be good at it. But the trading is one of those handful of things that there's really no shortchanging the process. I'm a rule breaker myself. I even believe to this day, like, well, those rules don't apply to me. They are for everybody else. And I actually inherently believe that. Like, my ego is that massive. And I constantly have to rein myself in all the time. And that happens a lot with people. Like, we have such high expectations of ourselves that sometimes we get frustrated or we get hard on ourselves. And then people, you know, they don't give up, but they start moving around. What I call is like, you know, we're like information whores sometimes. So like, oftentimes you could be learning a methodology, but before you gain mastery of it, you're thinking, ooh, I should take this class. I should watch this video. I need this scanner. Ooh, I need this scan. Ooh, if I had this news feed, I'd be really good. Ooh, if I use trade ideas, I'd be really good. Oh, if I had this TC2000, I could be really good. Oh, this guy made a lot of money on Twitter. Like, let me take his class. And so what happens is you've already got a weak foundation, and then you're layering on random strategies and concepts to that weak foundation, searching for something without really getting mastery over it. You know, in trading, like learning trends, support and resistance, like these kind of things, they seem so basic, but like these are still like the foundation. Like trend trading is still where the most bang for the buck is in terms of trading. And, you know, identifying trends and learning how to trade within those concepts is still, for a new person, going to be the most bang for the buck. It's the lowest risk, highest probability trades you can take. But oftentimes, before you get that mastery and before you build competence, which can only be done through repetitions of seeing the same things over and over, oftentimes we start to hop around. Oh, I got this guru, this video,
lack
this
of
video,
focus.
this class. And it's the same thing. I've done this myself. Like you can do it with dieting, right? Like, oh, I'm going to do a keto diet. I'm going to do a paleo diet. I'm going to do a no carb diet. I'm going to do a meat only diet. And then in the end, after you do all this thing, you're like, wow. In the end, like it's, hey, don't eat too much. Talk away that pizza, right? Talk away that last beer. Enjoy yourself a couple times a week, and keep it really, really simple, right? But instead, you think like, wow, like this niche thing, it's going to change it, but you can't stick with it.
Yeah. And that, that's really what I see also. It's the lack of consistency because we're a microwave society, right? We want things right now, right this way. And we have this idea that, just because we take a look at the simplicity of something, we say, how hard could that be? And that certainly is what happened to me. But focus and consistency of process is really the key and the great takeaway from you today, Kunal. I am so delighted that you took the time to be with
Thank you
me
for
today.
having me.
A lot of people said, as you were coming onto the show, they're like, oh my gosh, this guy's a master technician. We're going to learn so much. And we absolutely did. Folks, you got to find him, hunt him out, and take away those super important things that he talked about. Focus, simplicity, consistency. And Kunal, so great to have you.
Hey, thank you. It's been too long.
I know, really it is. We'll do it again soon. Hopefully I can squeeze in that schedule of yours again. All right. Thanks, everyone. Appreciate you coming to the Place Your Trades Network, and I'll see you all soon.